Interest rates are climbing fast.
Canadians should expect further increases.
And sales volume is way down. Properties are just sitting on the market, not moving. So what can we expect, especially coming June 1st, where the Bank of Canada is going to make another interest rate announcement? Hi, my name is Adam. I am the owner of Vision Real Estate. And if you're loving this content, please don't forget to subscribe and slap that like button if you enjoy this video, and hit the dislike button twice if you don't. So for this week, I really just wanted to dive into interest rates because this is what's really driving our market to cool, and it's happening rather quickly. So what does this mean moving forward, and how does it actually look from a buyer's perspective on a monthly cost basis, and why? All these questions that I have are not necessarily my field of expertise because I'm not a mortgage broker, but I know one who is fantastic. Jeff Mudrick is a local mortgage expert, and I actually just hopped on a quick call with him to ask him a few main questions that people should be thinking about right now and how this is all going to turn out. Let's just take somebody who, the average price in Toronto is about $1 million. If someone is going to buy $1 million house in Toronto, what does it cost you now versus what it cost you at the beginning of the year, or just before the beginning of this year?
So if you were to get a fixed rate mortgage in January, your monthly mortgage payment on, if you buy $1 million property, you have to put 20% down. Your mortgage is $800,000, and your monthly mortgage payment is just under $3,200 a month. That was January. Things have changed. As I mentioned, interest rate has almost doubled. So right now, if you were to purchase that same $1 million property, put the same 20% down, your monthly mortgage payment is going to be right around $4,000 today. So it's $800 a month difference.
So what I'm gathering by this is that, roughly speaking, in the past 4 months, money has gotten 20% more expensive?
Well, yeah, 20% more. Yeah, you're right on. You hit the nail on the head. Yeah.
So what's the difference between January variable rates and today's variable rates?
That is a great question. So there's two kind of ways that lenders can increase their variable rates. One is for anyone who's already purchased a home. It's when the Bank of Canada, increases their overnight lending rate. Then what happens is if they increase it by 0.25%, then the majority of the time your payments are going to go up by, whatever percent it is. But the second way that lenders increase the variable rate are for people who have not yet bought. And what they do is reduce the discount off of prime. So in January, the discount you could get off of prime was around 1.1 to 1.2%. So prime was at whatever it was, like 2.4, and you can get minus 1.2, meaning your actual interest rate was going to be 1.2%, which is fantastic. So right now, what they're doing, not only is prime increase, prime right now is at 3.2%, but the discount off of prime for majority of lenders has decreased. So now instead of getting 1.2% off of prime, most lenders are offering somewhere around between like 0.4 and 0.75% off of prime. In order to kind of quote unquote take advantage of what's going on, my suggestion, and it depends on what your goals are as a borrower, but the suggestion is still, and it still is for a lot of clients, is variable rate. The other thing I've been noticing in the conversations that I've been having is it's not a conversation of a 5-year variable versus a 5-year fixed. That conversation's long gone because a 5-year fixed is so expensive. And when clients see the monthly difference between the fixed and variable, even though we know the variable is going to increase, it's hard for a buyer to say, hey, I feel more comfortable spending $900 more a month.
So why is that gap so large? Why is that gap so large?
It will shrink. It's just waiting on. It's because the government is taking a while to combat inflation, and when they do combat it, it's going to go to the other it's going to go to the other end where maybe variable rates eventually are higher than fixed. But the conversation, isn't really the 5-year fixed versus 5-year variable. It's, because from a buyer's perspective, what my mindset is, hey, why would you want to lock in 5 years at this time of uncertainty? We're in such a weird time. Interest rates flew up. Maybe they're going to pop back down. We don't know. So the conversation has been more, hey, a 5-year variable rate versus a 1, 2, or 3-year fixed rate, because those rates are significantly lower than the 5-year fixed. And, does that make more sense? Does it make more sense to kind of, let's pause this right now. We're going to get a mortgage. We're going to be here for the next while. Let's sign a 2-year term and then kind of restart in 2 years from now to see what's happening in the market then. Those are a lot more of the conversations that I'm having. I think the average mortgage in Ontario lasts somewhere around 3.8 years, and 90+% of Canadians or Ontarians will choose a 5-year term on their mortgage. So these banks and lenders are really making a lot of money on the penalties associated with breaking your mortgage. So quick math, typical penalty to break a fixed rate mortgage with the bank is about 4% of your mortgage balance. So if your balance of your mortgage is $500,000, the penalty to break that mortgage is going to be $20,000. On the variable side, it's always 3 months interest, which equates to around just under 1% of the total balance of your mortgage. So in this case, it'd be $5,000.
Wow, that's a huge difference.
It's huge. It's huge. It's just, honestly, between you and I, depending on who's watching, the reason why most people take a 5-year fixed is because their parents did, and their parents did, and their parents did. And that's and they haven't gotten the best advice. If you were to take a 5-year fix literally a year ago today, you were getting it at 1.89%. That's a pretty advisable rate to take a 5-year fixed on. Anyways, so the penalties, that's why I mentioned, don't take the variable because of the rate itself, because it's going to be misleading, because we know rates are going to increase. Take it because all these other benefits, and one of them being the smaller penalty with breaking the mortgage, much smaller penalty.
That's interesting. So really taking a variable, even in this climate, even in this market, it still seems like it may not feel psychologically like it's giving you certainty, but it is kind of insulating you a little bit.
I did this analysis with a client on yesterday, and we played with some numbers to say, hey, if rates increased 0.25%, so 0.25%, 10 times in the next 24 months, at which point does it make sense to take a fixed rate, and at which point does it make sense to take a variable? So if it increases, that's 2.5% over the next 2 years, on paper, it makes more sense to take a fixed rate by about $2,000. So, in the total grand scheme of things, it would save you $2,000 over 5 years to take a fixed rate. However, then we have the conversation of, well, as we know, not 3.8% of folks, or the average mortgage lasts 3.8 years. So the penalty with breaking that fixed rate mortgage is 4 times more expensive than variable. So sure, you're going to save $2,000 over 60 payments. However, if you, for whatever reason, need to break that mortgage, the penalty is going to be X versus what a variable rate penalty would be. So they opted for the variable rate because it makes kind of the most sense for the majority of people most of the time.
So that's really counterintuitive.
Yeah. Alternatively too, though, like nowadays, maybe it does make more sense to take a 1 or 2 or 3 year fixed rate instead. It's going to pay less interest. And if we're anticipating that variable rates continue to rise to match where that fixed rate is, then if you want that cost certainty, then let's lock it in.
I hope you enjoyed my chat with Jeff, and I hope it cleared things up for you a little bit. If you have any questions for me, or you see a property that you're interested in and you want to know what it could be worth, please feel free to click the link below. where you will be connected directly to my calendar and you can book a quick 15-minute chat to go over a property, or you can even just send me the property address to adam@visionrealestate.ca and I will send you back my opinion of value within 24 hours. Enjoy the wonderful weather we have and stay safe.